support, and then we close through it, and then we retest it at 10 a.m. So 10 a.m. opens high first. We retest it as well as this fair value gap, and just this breaker overall. Like this whole down move is like a breaker pretty much. So we saw that really shallow retracement and more so consolidated after an expansion, which is always a continuation signature. So, and we have yet to really trade into all these lows. So, yeah, that was just a good entry if you got in like right here. But yeah, that was my trade on RTY, and I took CL as well. It was a pussy. YM. Yeah, there was definitely some logic to long YM. Wait, you said you weren't. Wait, what time frame is this? 5 minute. Oh, a 15-point stop. You were okay. I see. Damn, that shit ran. Yeah, that's unfortunate. Yeah, but if you look at YM, if you're just doing correlation between YM and RTY, it's very obvious that like you never can pattern train a reversal candle, right? Because when you look internally to this reversal candle, like mechanically, yeah, you have a closer, but when you actually look inside of this, it's not a reversal candle at all, right? Because it's just consolidation, as you see, right? This is a true reversal off this high. First off, you don't even want to see this next candle make this deep ass retracement, but there's no follow through to the downside, right? So it's really just failure swings to both sides. So you can already assume that with this candle, this next candle opening up near the previous high, you can already assume that YM is going to take this high out, and RTY being the weaker pair can create a lower low, right? Creating a divergence. That's what you want to see. And here is a little bit different, where we have this manipulation. We kind of trade away from it, but it's not as strong, so I can't even revert. I never even like, when it's like ugly like this, I don't care about using any invalidation point here. It's just too ugly. I'll just wait for a profile. So like internally to the next day, it'll create something, which is what happens. Right here, right? So that's that SMT that you can kind of trust to form the wick of this candle to then trade away from this Tuesday reversal, right? And here's the SMT, right? So you want to have that purge of the range high to then trade lower, because you can't really trust any of these like failure swings or nothing like that. Does that kind of make sense there? But yeah, that was like super clean. Do you make a new watch list every morning? No, I just watch gold, oil, and indices. That's it. I don't really trade, like, you see EU and G, I never trade that. So yeah, it's just like 3 markets really. Like I'm considering this as well, all the one market, honestly. Like if I want to be bearish, I'm going to trade whatever pair is the weakest and whatever has the cleanest profile, typically. Like that's what I'm doing. I'm not trading like all 4 markets, you know what I'm saying? Oh, really? Retail filter. Let's go. Or do you consider CL not A plus? So, yeah, if we go to CL, so like it's a fine trade, but it's not A plus because I'm entering right here after objective has already been taken. Right, but there's a reason why I can trade this. So if you just go to daily, you have a range from low to high, essentially, right? So coming into day, it doesn't even make sense to frame reversal, especially after Monday's close. So when I look to the left, we're already closing above this opposing PD ray. We're using it as support here. But it's really like, there's an SMT down here, so it's just bullish order flow to this high is how I'm viewing it. But you see I'm not trading away from a swing point on the daily time frame. That's for one reason why it's not A+. Ideally, you want to be trading away from a swing point like I did on RTY. But all this really was, the way I'm viewing this is like kind of like this. So expansion, retracement, expansion, retracement, expansion, retracement, expansion. And then you have a retracement, which is the profile today, and expansion again. You can just see it on the on the 4 hours. It's gonna be really obvious, right? So with this previous close yesterday, more so like right here, you see you have a range from low to high. If there's gonna be a true reversal from this high, then you don't want to see this deep retracement as we see, right? That's already invalidation of this being a bearish day. And so this is the daily open here. As you see, these first two candles are Asia session, and then we get London session taking out Asia session low, and now we're just closing over this fair value gap. So like if you're a London trader, this is really easy to trade. Back-to-back days here, like super easy to trade. The previous high. But how do you know you're going to get continuation? Whoops. Right, so this is yeah, obviously have that small wick on the daily supporting expansion. The low of day frame from manipulation. So you can just see the phase of price for expansion, reversal, expansion, consolidation, manipulation, expansion, which forms the wick. And you have a CST in the hourly. So ideally, this is the trade you take to get this high. But I'm not awake at these times. So I see that when I come to charts, and I was like out and about, so I could only look at my phone on like one chart. I was too busy to look at like multiple assets, so I was just looking at CL. But as you see, if we're gonna be, a reversal, first off, it doesn't even make sense to frame reversal because of how close we are to this high. It doesn't really make sense logically. The profile supports bullishness, so it's really just about having targets still available, which is what we have, right? So yeah, we take an objective for the day, but when you have objectives past that, it's still okay when the daily candle has yet to really expand. Like this is not a large range here. As you see, the previous two ranges are larger than that. So if there's still enough time in the day to actually expand, and there's still room to expand, you can still take it. You just need to see a continuation signature when we hit this high. That's what we get right here. Right, clearly not a manipulation, where we're just seeing a reversal candle. If this is like a true manipulation, we would see, a displacement lower, but that's not what we see. When I go to the 30-minute here, it's just a fair value gap. And as you see here, the 30-minute time frame is the lowest point of this retracement going RB. It's a higher high, right? And so that's a cracking correlation within a gap. The 6 AM candle is already aligned bullish. So this little retracement, it's not aligned, right? Obviously. But when you get this candle too, now it's realigned. So now the 30-minute is realigned with the 6 AM candle. Now we can expect continuation. But I'm trading the 1 hour and 5-minute here, just because it's clear. So as you see, we get a CSD. All I need to see is this right here. So as you see, this candle opens low first. And then we get that close through. Now it's valid to enter. As you see, it's just consolidation damn near, right? That's not any reversal signature at all. That's how, you're still using phase of price alone. With the profile alone, like expansion, consolidation, manipulation, expansion into a high, consolidation, forming some sort of reversal to trade away from, then I can trade continuation to this high. And we have oil inventories at 10:30, so I'm partialing before that because I don't have too much experience with, red folder news on oil, so just wanted to be sure and take half my position off there. And yeah, this is the full TP basically right here. My look to the left is right here. That makes sense? So you see now it's quite a large range. You see how we had room to expand at this point? So yeah, it's not A+, but it's still a fine trade. It's literally just like yesterday where I took a trade on... Oh yeah, I took this trade. Right, where we took at the previous high, but look at the daily range. It's still small. And 9:30 is expanding away from the low day. So I can expect some sort of continuation to this high up here to get at least 2R. You know what I'm saying? I'm not demanding too much. And that's all it takes right there, dude. You know what I'm saying? If you can consistently do that, these little moves, that's why you guys don't see me like needing the higher time frame to be like so clear and stuff. Because I'm just taking like 2R, dude. A lot of times. Or like 2 to 5R, like somewhere around there. I'm just trading the current day's range, you know? So it's not nothing too crazy. CL literally took same as NQ yesterday. I did not call it. I did not call yesterday A plus, did I? I said the profile was A plus. It's just like this day. Where was it? I'm thinking of something else. I'm thinking of another pair, but this profile is ideal. Right, we open low, create the low of the day from manipulation, and have SMT at the low. And then you see, right, you see how we create a lower low here? This is exactly what happened today on indices. Like, these things repeat. You see the strength switch. That's why I know this is not going to be a reversal of this high as well. So look at this retracement over here. It's a lot deeper, right? When originally, NQ was a stronger asset. Or sorry, the weaker asset. But now we're creating a more shallow run. So that strength is switching. You see, now we have a bullish candle close over here. We have a bearish candle close. You can just see the strength. So that's why I'm going to pick NQ. And then we create a divergence in this gap. So that's what I'm saying, like, just for this 2R trade, it's pretty high probable with all this stuff that we saw, right? With like NQ, 930 continuation signature, where we see 930 make an opposing run to the draw. Whoops. So it makes an opposing run to the draw, and then we close through it. That's just a nice continuation. It's not A plus in my opinion, but yeah, it's a good trade. Like, it doesn't have, like, a good trade doesn't mean it has to be like A plus necessarily. And everyone's definition of A plus trade is like way different. You did called. Okay, if I called it A plus, then whatever. It's still a good trade. That's all I know. It was very high probable. But today on RTY, it's like, holy shit, so clean, bro. I didn't even look at gold. What the hell did gold do today? It's ass. Oh my goodness. Yeah, dude, gold is just not playing out here. Where's Monday at? We traded Monday. We avoided Tuesday. And like I said, I was just busy this morning. But I didn't miss anything, clearly. It just looks terrible with these closes. Really consolidation. And these equal high. Yeah, that's just horrible. Euro, no, I don't. Was there anything today to trade? This is the only thing I saw was this model here to get to the previous low. But then once you take out the previous low, it can get a little choppy like this, right? That's why ideally I want to trade before we take out lows, because we can get this new phase. But if you're going to get continuation, then there needs to be objectives to the left, which you have this one potentially. Then you need to see a continuation signature. But you don't want to see this, honestly. This really deep pullback. You don't want to see that. Like immediately after the 1 hour close. Not ideal. So like nothing to trade in New York there. Give review. Gold? Why are you trading gold? Okay, so you maybe could have traded this candle here. Wait, did you trade that reversal candle? Oh, hell no. I mean, it worked out, but I typically don't like to trade the reversal candle with the large wick, but it worked for you. Like, that's mechanically my model, but you want this. Wait. I'm confused now. Oh, there's SMT right there. Okay, I didn't know that. Was this the 30-minute? Okay. So it's like SMT here, you said? Here, okay. Yeah, it's not horrible. But it's just, you're just fading the 4-hour candle, so that's just kind of a risk you have to take. If it fails, then you know why. If daily bias is unclear. So like if the daily chart is unclear, then like I can potentially frame I'll just like frame like 4-hour and 1-hour models. So the way I get daily bias is from the way the weekly candles form. So just like indices, this gives you bias, like how we open high first and then create no wick. That gives you bias to trade back to this low, right? You just need a profile to trade back to it because this day doesn't reverse, so you have to revert to this high as a reversal. As long as you get a profile to trade back to that, that's good. So like weekly profiles give you some sort of insight on the daily chart, but it's also just like week or like models, so like internal, external, internal, like order pairing ranges or whatnot. Like those, give you insight, but sometimes you don't have that necessarily, right? So a lot of times those revert to like 4-hour or 1-hour models where the daily candle supports it. So the way the daily candle is forming, so let's say something like this. Let's say the previous day expands. So you want to see continuation, so you mark out the EQ of the previous candle's range. If you want to see continuation, ideally we form the low of the new candle in the upper half of that candle's range. I can target this, here. That's what I targeted yesterday, was this high. But as you see within this candle here, so a lot of it is just looking at the previous candle and forming a continuation or reversal. That's it. So if it's going to be continuation, like I said, you measure out the 0.5 and you look for a PD array within the upper half to either frame a continuation off of, or if there is none, then the current day that's printing needs to create that reversal. Right? So like maybe off session lows or something. So if I look here, we open up the day. It's like, do we have anything in the 4-hour? Yes, we have a fair value gap, so let's mark that out. So I always frame profiles off 1-hour and 4-hour time frame. So we're also opening near a 1-hour swing point as well. So either one of these objectives, because they're near the opening price, I can frame a continuation off of. And these are like my invalidation points. So if we don't reverse off these levels, then you can't frame a bullish day. So as we see, we consolidate, which is really good. When you think about phases price, we expand and consolidate. That's a continuation signature, right? We don't reverse from consolidation. So when you manipulate the opposing side of the range and then have an SMT, that's perfect, right? Now we don't need to see this gap because the daily is opening low first, right? That's already one condition for a bullish day. And also it's opening low as well, right? With a small wick. Okay, so those two things support bullishness, right? So that supports this model being manipulation of the range low into range high. So instead of internal external, it's simply just you know, reversal off the range low, expansion of the range high. So this is one entry right here. Now what about continuation? Right, because you still have an objective above. Then this internal to external, like the daily profile is already bullish, so it already supports continuation from like these fair value gaps. So when I pair like a driver with this, when we see the driver, this candle right here, expanding away from the low day, then that also supports my narrative, right? And we see an SMT in that gap, right? Just like we see an SMT at this range low, right, at a key level, that supports, continuation, right? Now I'm just trading 4-hour profiles, right, where you see London reversal, 6 a.m. continuation, 10 a.m. continuation towards this high. But yeah, it's just a lot of putting these models together and having the daily candle support that model, but as well as like the profile, the way the candle forms and all this stuff. It's pretty simple. When you learn the individual concepts alone, it's like pretty simple. And there's like a bunch of little stuff that will take your trading to like the next level. That just comes with experience. What do you see? I see chop. See, like this, I don't care about. I don't care about any of this stuff. Is it relevant to me? It's like higher time frame stuff. I don't have to anticipate any of that stuff. Makes trading like I don't do any weekly analysis. It makes trading so much easier, bro. Less stressful. I used to get like it used to bother me when I couldn't anticipate where price is gonna go, like the whole week or something. But then I realized it doesn't actually matter. Keep not double purge, dude. An enigma to trading. God, I used to try to implement that too. Yeah, or review NQ. Just briefly. So you wanted to trade when you gap like this, you always wanted to trade back to it. But the previous day's profile didn't support that, right? And as well as this, like you can't trade back to it Monday either, because we have a driver at 9:45 and obviously 9:30. So whenever you don't have a reversal price to a driver, you want the driver to reverse. If there's gonna be bearish day, then the driver needs to reverse. Like you must demand that. If it doesn't reverse, as we see, you go higher, then it's like you have to let the day go and you have to know that price is not going to hit this key level or this new week opening gap. It's not going to fill it the same day. So this is the day I just let go, because when I look left, we already take out these objectives here. This is way too far away for me to assume that to get hit the same day. So I just let this day go here. Now I roll over the same bias the next day. Are we going to hit this level, Tuesday? Well, no, because the profile doesn't support it. So I assume they're going to go to this high before we go to this low. That's all I know, right? So that's what I traded to, right? And then now with this closure, since we took out this high, I'm not saying it's a potential reversal point, but we have an S&T there, which I don't deem to be that relevant. But it's really just the previous high, right? It's just like this day here, right? If we're going to reverse, we would ideally reverse out the previous high. But when you get a continuation signature through it, that's not ideal, right? But as you see here, you want a shallow run above the previous high, because this has to be a reversal day, right? Because obviously we didn't reverse in this day. So it has to be a reversal day. And if it's going to be a reversal day, you want it to be an expansion day. So you have to have that small wick, right? Who's mentioned me? Oh, that was AM. So if you see here, we had that small wick. What do we see here as well? SMT, which is perfect. It's ideal. Right, you see this SMT here? Now, if you guys went long, I don't hate you for it, because the way this candle forms is actually kind of supporting a bullish day potentially, right? You see it open low first. Now, what do we need to see when you have an established or just a low of day that you assume to be the low of day? Prior to a driver, I say these things every day. You need the driver to expand away from low day, right? What do we see? price reverses at 9:30. So do you see why you need to wait for 9:30? You have to wait for 9:30 to confirm it literally confirms narrative, right? What this does here as well is you see NQ created the higher high, it took out the previous high. Then you see that strength switch, right? You have an SMT paired with a driver. So now you have an internal protected swing, right? The high of the day is not a protected swing. It's just Asia high, not really a protected swing. But below the opening price, right? You're kind of expanding away from the high of day. You have an internal manipulation, right? You have this SMT here with the ES, and then YM or whatever is trading away from that, right? So now this supports a bearish day, right? Where we see the driver expanding away from this high, right? And then you have this SMT here. So if you use my model, here it is right here. Right, you have 9 o'clock candle. So the first 30 minutes in the 9 o'clock 1 hour candle kind of expands away. And you have this low to target, but that's not the low that we're concerned with. It would then be the previous day's low and then onward to the Monday low, which is the new week opening gap, right? That's our main focus. That's our narrative. So all you need to see is 9:30. So here's the next candle here. Make an opposing run to the draw. And then once we close through, that confirms it, right? Now, I wasn't at the charts at this time. I was busy. But mechanically, this is the only entry I see around this driver within a 6 a.m. candle. It's really just this. But this stop loss is huge, like 50 points. Like, hell nah, bro. That's crazy work. So, like, I would have to demand a retest, so I wouldn't even trade this probably regardless, to be honest. But there's another opportunity, like Realtor showed. It's this one right here. So why are we trading this way low in the range, right? Well, this is a relevant objective, right? When we look left, there's nothing else that would stop this besides, this, right? Rocket reverse here, the previous low. We can potentially go here, right? And as you see, I want you to pay attention to this candle right here, right? It takes out the previous candle's high. It's more of a small range reversal candle. Now, when I go to the strongest asset, as we see, we have a much deeper run above this previous high where we see NQ and ES. Don't even take out Asia highs. So we see that that same candle creates a lower low and also has a huge range, right? It's also it's just showing strength lower. So if the strongest asset is showing strength lower, then we can expect the weaker assets to also continue, right? And this is also around the opening price of 10 a.m. candle. So at this point, the 10 a.m. candle hasn't yet really expanded much. So you can assume that we can get a continuation, right? And you have a fractal model right here. And that was just really nice. And then we just continue to this low. So it's a bit advanced, but this is why I always say to just wait for 9:30. Like, don't assume things. Let 9:30, let the driver expand away. It's going to be the easiest thing for you. And if you're like super new, just wait for 10 a.m. Like literally 10 a.m. continuation is like the majority of my trades, It's just easier. You don't have to guess anything because after 10 a.m. opens, all the drivers have passed. You have all this information to work with. You have the 2 sessions. And yeah, you see what the drivers did. It's like super easy. And there's still plenty of opportunities. But entering around these drivers or before them just take more experience. Like they really do. If lower time frame outperforming, what do you mean outperforming higher time frame? Then what should I have to do? I don't know what you mean by that, honestly. When framing from a 4-hour swing, do you ideally need a 30-minute swing? So you just need a 1 hour or 30-minute, either or. This price always sweep bigger swings before heading to high resistance. If so, Okay, so this is what I do. So I always ideally have the high of day foreign for manipulation. Now here, in this case, technically not, right? But if I have a high of day that is maybe not foreign from high resistance, visibly shown on the 4-hour or 1-hour time frame through a swing point, as you see, we're not sweeping a high over here. And I'm not viewing this as a sweep, by the way, because we closed multiple candles above it. It's not really a sweep. More of a sweep is like this. That's really not either, but we really don't have one, to be honest. That's really clean over here. This is more like a sweep to me, you know, like we wick a low, we reverse in 2 candles. But anyways, I like the high and low of day to be formed from manipulation, ideally, from the hourly or 4-hour candles. But yeah, when you want to get to a level, you always want to require manipulation from a relevant level. Like we're not going to be trading away. Let's say we have failure swings above here or something, and then we have like a draw like down here. I would never frame a reversal off of this high because it's just a failure swing to all these highs. You want to price to clear all these failure swings. So when you clear all the levels to the left or all the relevant levels to the left, and let's say there's a failure, this like the next high is like way up here. You see the space between this high and this high? That's what defines this as a relevant swing, because these are not failure swings. So when price manipulates all these failure swings, there's no reason to return back here, right? Everything to the left is cleared. Whereas if we just clear this high, if we just clear this high, there is a reason to return back here because there's failure swings above it. So your reversal point isn't really protected, right? So ideally you want to be framing reversals from highs and lows, right? And then once you have a reversal, then I look for like order blocks or fair value gaps. You know what I'm saying? But even from fair value gaps or like order blocks, I like to see some sort of high resistance created to trade away from. You know what I'm saying? Even like today on RTY, like yes, we have a reversal candle, but even within this candle, I want the high of the day to be formed from manipulation. This is what we have. SMT is manipulation, right? Which this creates the high of day, obviously. So yeah. If you just stuck to that, if you just stuck to framing trades from high and low, or like the low day is formed from like manipulation and stuff, you would see a lot more. You would just see a lot of success in your trading. Like here's this one. If you're a London trader specifically, like you just want Asia to consolidate and just frame reverse off the low. If you look at today, or actually yesterday, it's literally the same thing. Right? You just frame reverse off the low. And here you have an SMT right here. All right, this manipulation creates a low day. If you look on like CL the last 2 days, obviously with context though, like there's context to trade these longs. Like just trade this manipulation. It's like simple as that off hourly or 4-hour swing points. But that's how I try to, trade New York reversals and stuff like that. But there's also a protocol for when this doesn't happen. There's like so many if-then scenarios within a daily range and things that make it low probability. Like there's just a lot that goes into it. A lot of just like situational things, because maybe the context can be different this day than the previous day, in like many different ways, from the higher time frame to intraday stuff to like correlated assets. There's like a lot of stuff, bro. But that stuff just comes with time. Price doesn't price. Wait, does price always sweep? I already answered that, right? Do I think IC's a cuck? I don't know. I don't really watch this content. Never have, so I don't know. Given that we saw a Wednesday reversal for NQ, do you anticipate Thursday or Friday to trend bearish? Yeah, I mean, profile-wise, we see the the weekly candle opening high first. Now NQ still hasn't taken this low out, or sorry, YM. We could potentially see that. And if you look, we just have some fair swings down here. But I will simply just wait for a profile. Like, I don't even do a lot of this anticipation stuff. Like, I really don't care. Like, I'll just, if there's a profile to support it, then I simply will trade it. I could have an idea of what the pre-state is going to do, but I would still need a profile to support it. That's why I focus on profiles so much in my trading. Like, that's why I studied all these like little details in profiles. Like, that's the real sauce, in my opinion. Like, that's kind of what separates me from T-Trades in a way. Like, he obviously uses profiles, but he uses daily closures a lot, which I don't really require. But when I have a closure, it's obviously very nice. When you have a closure and a profile supporting it, very nice. But that's why I can trade like majority of days, right? I traded this day. Let me see, hold on. I'm pretty sure I traded like this whole range here, bro. Like, hold on. Let me actually tell you. I traded this day. I traded this day. I traded this day on RTY and YM. I took 1 loss, 1 win. This day is kind of sus. I don't know about this day. I don't remember. I'll have to check my Instagram. I don't even remember this day. Oh yeah, I did on YM though. There's a reversal here. This is really clean. I traded this day. I traded this day on ES. What about this day? Is this? I traded this on NQ, right? It should be bearish. Yep, traded this on NQ. What about this? I don't know if I traded this day, to be honest, or this day. I don't really remember too much of this, but yeah, like majority of the days I can trade, and not every day is like a candle closure, you know? Like if I was going to trade NQ today, which I would be looking to trade it, just off the idea of this, just the weekly narrative. Like there's other ways you can get bias, is what I'm trying to tell you. It's not just daily closures. It's with literally profiles itself and the way the candle is actually forming. Like those two things must agree. Like you can have a classic buy day. Let's say Asia goes higher. No, hold on. Or let's just say we consolidate and then London like makes a really deep retracement, creating a large wick. Like you can't have a London reversal and expect New York to expand because the way the daily candle is forming, too large of a wick. What the hell is going on right now? That was weird. So like the way the candle is forming, the profile must also like agree with that, you know what I'm saying? Which a lot of people like, they don't really understand how like even this reversal candle forms, which I traded. They're like, why the hell would you trade this fat ass wick? There's a specific way you can trade it, which makes it different from, there's like different reversal candles and the way they form. Like the way I teach it is the candle must open low, like specific way. They form a reversal. I'm not even gonna get into it, but maybe I'll show y'all that sometime. But yeah, like there's candle profiles and then there's daily profiles is what I'm trying to say. Sure, your thoughts on gold, dude. Gold is a fucking hot mess, bro. I traded Monday on gold. Like I said, I was busy in the morning, so I wouldn't even trade this regardless, though. Like there's literally nothing to trade here. Potentially, like what this someone said, or someone traded this, but I don't trade reversal candles typically. It's very specific when I actually trade them. But I think Euro took out like this high up here. Yeah, like Euro took out this high, so you want to see a reversal here for 6 a.m. right? Because if London reverses, then you want 6 a.m. candle to expand, but this is when like phases of price kind of come in. So, like now you have a new invalidation point. It would be this fair value gap for continuation. So once we take out these lows, you don't want to see a deep retracement. Right? Ideally, you want to see a slow retracement or a shallow retracement or consolidation, because those are continuation signatures. You don't want to see price kind of expand back in the range. which I think is what it does. Yeah, like this could be potentially fine, but you would need to reverse like off this candle's high, which it just doesn't do. You see this? It's not reversal. This is more like expansion into the lows and expansion back in the range. So it's just consolidating, you know? And that's how you just kind of invalidate that idea. And then obviously, I'm never going to trade away from this. This too deep of a run to support, you know, bearishness and whatnot. And whenever you see this as the strongest asset between the three, I'm pretty sure. I'm not really sure. I didn't really look that much. Right? When there's no like, you know, willingness to trade away on the strongest asset, then you can't expect the weaker asset to continue lower, if that makes sense. This is literally just consolidation. And that's really what gave me bias this day here. Because coming to the day, it's like I can't even be bullish, to be honest. Because like it's just an inside bar. So I never want to really trade away from that, but there's a little bit of stuff you can kind of hint to here. Is this asset, the weakest asset is in right, this is the same range, or it's like somewhere over here or something. You, obviously, euro is the strongest, and then gold is like the middleman here, and then silver is the weakest. But when you see that strength switch, where you have silver being the strongest asset of the three, and you can see this intraday, then it's like I can't be bearish this day. So if I was going to trade this day, right, I would be bullish, right? Because if that strength switches, that's very telling, right? But it's like intraday, it's very ugly, right? I don't want to trade away from these fair swings. So this is the only trade I could justify this previous day, was this internal manipulation, which is what we had today on NQ pretty much. But like the low day is like irrelevant. It's like Asia lower day. But internally to the daily range, we form some sort of manipulation, as you see. And you see what I mean by the weakest asset? When it creates a lower low, you want it still to expand away, right? Because if this doesn't expand away, then this other asset is likely just going to like consolidate, right? So there's like a potential trade like right here, this fractal model higher into the previous day's high. But like that's it. Like I wouldn't trade bearish because the opposing run is too far. There's no willingness to trade away on the stronger asset. Like there's no it doesn't even fit my profile to trade like a what you call it, a reversal day or nothing like that. But yeah, there's just not. You just can't trade this really. Like when I look at silver, we see that it takes out this high, right? You have a divergence. But this is pattern trading. Because when I look at the weaker assets, like quote unquote, where is the weakness here? There's no weakness shown, right? We're literally just consolidating. That's what I mean. And now we're just creating like these equal highs here, that there's no weakness shown here. So it's like, if there's no weakness on the weaker asset, then it's like the stronger asset's not going to continue lower either, you know what I'm saying? And yeah, there's just no weakness on these other pairs, right? We're actually rejecting lows, but there's also there's no direction. We're just consolidating, you know what I'm saying? So like little shit like that can help you avoid stuff, you know what I'm saying? That was more so this day as well. But yeah, it's just nothing to trade, bro, right now. I'm just waiting for a relevant SMT to form, honestly. But these lows are like sus. Like, I don't like these lows. But as you see, like, you see how far this is going to create a fair value gap here. This is a potential scenario. Like, you can run scenarios. So, like, you see this fair value gap? If you go on gold, there is no fair value gap. So, you would want this asset to create a lower low, create an SMT, and this asset to create a higher low and this fair value gap to go higher. Like that's one of the scenarios that could happen, which would be ideal, right? If I go to like euro, what's happening? Nothing. It's just, I don't know. It's just continuing higher. You have this opposing candle, but like there's nothing here to frame. Like it's not clean enough. You know what I'm saying? So it'd have to be like some sort of more intraday stuff, you know? Can you please explain, please mark the SMT? Wait, which SMT? If you need help with the SMT, then I would watch C-Trade's video on it. There's a good video on it. Brother, I hope you do good. I have 2 questions. I'm now mostly active on forex and also trade swing models, ranges, order pairing, etc. And trade sometimes in Q and CFD, with CFD. But I want to try futures prop firms, but I don't know. I don't quite understand all the rules. Do you have some videos that are helpful? I think, okay, so if you're just new to futures, watch T-Trade's video on futures. But yeah, you just got to read up on the rules on, what you call it? Sites, right? The rules on the challenges, they explain them all. There's also videos too. Like they have full-on videos on the websites for all the prop firms, I'm pretty sure. That explain all the rules, explain how. It's actually better. And if I join the lens, do I learn how you look at yeah, of course, you will learn my model. Like this, but more, you know, like we do back tests, we do maybe on a specific topic or concept, like a lesson, or we'll just do like weekly reviews of all the valid trades and whatnot. You learn a lot that way. Oh, I took a long and lost this morning, and he says he doesn't hate me. I take a trade and win. No. If you traded prior to 9:30, then I hate you. I'm playing. But like if you're just looking at the way the profile is forming, it looks bullish. Like it's a hard day to navigate for sure. So that's why I'm saying like it's a little bit more advanced. But this is just a general rule. Like when we have a low of day, right, that is created in like especially like Asia or London, then I'm always going to wait for the driver to expand away. Always. Basically. That's just an easy loss to avoid, honestly. Yeah, protected swings. So like I said, protected swing, just a relevant swing. Ideally, you want gaps between highs and lows. You don't want to be trading for failure swings. That's the thing you don't want, right? Because we target failure swings, you don't trade away from them. So when you take out a high, right, and there's nothing else to the left, right? The space is like far enough. I can't give you like an exact measurement, but like you just have to eyeball it. You're gonna get used to it. Then we can assume that once we clear this, you know, there's no reason to return back to this high, right? Because there's nothing else to the left. So then you could target, you know, this low and whatnot. This is where you want to, when you see these relevant swings, this is where you want to see new phases of price. If we get a continuation signature, like a consolidation, then we expand again. If we don't manipulate this high, then we're going to go to the next relevant swing, generally. Right? But this happens intraday, like every day, like protected highs and lows that form the high and low of the day. That's why it's really good to implement in profiling. Like if I show you just a lot of these days, right? So not particularly this day, but this day, low of the day. Look at this protected or this relevant swing. When I look left, there's no swing lows that are relevant, right? And it's really important when they're close to the daily open, because if it's close to the daily open, the daily can open low, create a small wick, right? Because it's near the opening price. And this is ideally when you reverse, because like I said, there's nothing else left. There's like a fair value gap below here, but that's really it. So this low though is like relevant, right? It's like a swing point. I wouldn't even refer to this as like irrelevant. It's just like too small. But once you see an SMT here, you see a reaction, that's ideal, right? Right, so that's something that I traded, but I traded right here. Now, what about this day right here? So this is a hard day to navigate as well, which I traded FOMC though. So if you look at this day, you have failure swings off the lows, right? And you have this high. So if you're gonna go bearish, this is the only high to reverse from because look at the space between these highs. You have failure swings to the lows. So you want the driver because this next candle is the driver. It's 9:30. If there's no established higher low today before a driver, you actually want the driver to reverse price. And if when it doesn't and we don't reverse from here, that's a red flag, right, for bearish prices, because there's nowhere else to reverse from, right? So we're likely going to continue. So that's like an if-then scenario. Like if we don't reverse here, then we could potentially go higher, which is what we do, which is what I traded, right? The failure to reverse here, as you see, where you can flip your bias and just go here, and target these highs, right? So you see 9:30 expanding away from the low of day, right? You can never assume that the higher day was put in prior to that. But when 9:30 starts to expand away from that low, there's also previous low SMT. I'll show you it. So you see this low gets taken on NQ. I think on ES there's also a divergence. I can't remember. Maybe not yet. Okay, there is. See this small divergence? It's hard to trust, right? Because there's no reversal in this candle. So this next day would have to kind of confirm the reversal, right? Kind of has to just expand away from this low. So like when 9:30 starts to expand away from that SMT and the low of day, then you can start to trust it. But I didn't trade this. I traded 1400. This is FOMC. So generally you just want to wait for that to pass. And this is what I traded. Right. The news event is also expanding away from the low of day. Something that we see every single day. Like these things repeat with the drivers. So that just confirms narrative, right? When I go to lower time frames and I see the first news event make an opposing run, has an SM to the YM here, I can assume this is the low of the 1400 candle. So when you get a continuation signature, right, you see the CSD and the continuation, it's just an easy long, right? Because at this point, we haven't even taken out the previous day's high. If I show you, whoops. This is what really gave me a lot of bias was we didn't take out the previous high yet. And you're not going to inside bar on a high impact news day. It's just not really going to happen. So as you see prior to the 1400 news release in 1430, we have yet to take out the previous day's high and low. So I'm one-sided biased to get to this high. And what would get us there is the news event, obviously, right? So that's why I traded to, and then I traded to this high. Because if we're going to get to this high, we're going to target this high because this high is a failure swing, right? We're not going to frame a reversal off these highs, right? If we're trading away from failure swings, which we kind of are, whenever you trade away from failure swings, you need more confirmation. You need price to actually show you that we're going to reverse from these lows, essentially, right? So when 9:30 and the drivers expand away, and we're just expanding away, and now we're just getting close to all these highs, like, okay, then you can trust it, right? But initially, like going to 9:30, I can't actually know that we're going to reverse from these lows. I can't know that. But when the drivers start to give you, confirmation and whatnot, then you can do it. But if you look at these 2 days here, the low of days form from manipulation. What do the drivers do? Expand away. We have 8:30 news and 9:30, which I traded both of them to go higher. They're expanding away from the low day, right? When I look at this day, we have SMT right here. So the previous day creates SMT, but again, it doesn't reverse, right, within the candle. So the next day would have to reverse or expand away. This is typically when early on in the session, it's going to create the low. Because if you put in a reversal like this, and the previous day, like more so close an expansion candle, there's not going to be any key levels to to really reverse from if we're not going to reverse from the previous day's low, if that makes sense. Like here, maybe you have like a CSD or whatnot to trade away from, but as you see, like the 1800 candle just opens high first, which you can already kind of like anticipate early on in the session to do that, right? Because after manipulation, right? If like later in the day, the previous candle, we manipulate, but we haven't expanded, then you expect the next day, early on in the day, to expand. Same thing with like days in the week. But if I go to 9 o'clock here, which is the next candle, not this candle, but the next one, I see that there's not really an established low of the day that I can trade away from. Like I see that the low of the day is just 1800, which I really never trust. So what am I gonna wait for? The driver. So you see all these lows? I don't really trust that. So I want the driver to either do this, like manipulate all these lows, or create an SMT with these lows, or just make some sort of opposing run and then close through, right? Some sort of like relevant something, right? To give me some insight. And that's what we see with this 930 candle. It's this next candle right here. So as you see, we're starting to expand away from the low day. If I look at YM here, you see that it takes out all these lows, which forms a divergence, right? So that's what's giving me insight to actually trade away from this low. So I took 2 trades this day. My first trade was targeting all these failure swings. So like I said, like we take out this relevant swing on ES, right? When I look left, there's nothing else, right? So you want a reversal here. And then the opposing side, we just have a bunch of failure swings to target, right? In intraday, we formed a protected swing, right? The other asset takes out this low. When I look to the left, you see the space between this low and this low, right? That creates a protected swing to trade away from. There's really no reason to return back to these lows. We also have 10 o'clock news this day. So like I said, I got involved right here. It was on the 5 minute, sorry. Right, what? It was on ES actually. Yeah, it was right here. And I was looking for all these highs, like I said. But once we hit like above 2R, I took my first partial. And it ran for about 3.6R, but it came back. So obviously I'm going to go break even at this point because inside of expansion, you don't want to see deep retracements all the way to entry. There's no structure for me to trail to, so I just kind of have to eat the break even after my partial. But here's 10 a.m. news. So if if this is the low of day or whatever, if this is the low that we want to trade away from, then what should the driver do, right? It should make an opposing run to it and close through. So that's what we do. Right, and this is what I trade right here. There's actually a 2-stage SMT with YM. So this creates the low of the 10 a.m. candle. Right, 10 a.m. opens low. Right, you see the driver opens low first, which creates the low of this 10 a.m. candle to then trade to all these highs. So that's what I traded to. But my main focus was this previous day's high was my main focus. Right, because this is the weaker asset. I'm trading the weaker asset. So we can maybe expect NQ to get to this high, which it doesn't do it. I don't think. Yeah, it doesn't do it. But then we get Monday, right? Then I trade Monday to this high. But yeah, just a little bit about protected swings. If it wasn't for new week opening guy, would you still take the 10H RTY given? Yeah, I would still take it. Just because the profile is supporting bearishness. And if you look here, if you just look at the close on RTY, it's the only asset that closed bearish. Look at this close here. Go on NQ. It's a bullish expansion. Go on ES, not an expansion candle, but you know what I'm saying. It doesn't close above this high, it closes bullish. RTY, it closes inside, but I already went over this. You can't even use this as a reversal candle because there's no reversal inside this candle. It's just consolidation. As you see, clearly no reversal. So you can already assume that this asset will go and take this high out. This is what you demand at least, because you're not going to trade away from these failure swings. Right, so you need this asset to manipulate, which then would create an SMT, because you want the weaker asset not to take out this high, which would create an SMT, right? Which is what happens. You can already like anticipate that happening. Like let's say one asset is like really far away from a level and the other one's really close. Like you already can assume an SMT is going to form there. And you want if you want a reversement level, you want an SMT to form there. Can you show me your Enigma show? I didn't take NQ. Oh, what would I take? Okay, so like mechanically this is the trade, but it's a 50-point stop loss. Like I'm not taking that, dude. Unless I'm using like micros. So you see this close here. This is what you take right here. You can either take it on the close and like put your stop loss at the body, but like I said, that's 50 points, dude. That's a big stop loss. So maybe you put stop loss at like this breaker on lower time frame. This is a breaker, pretty sure. It's like a breaker or whatnot. You could maybe do that, or you just wait for a retest, which you would never get. So it's either or. But that stop loss is too large. Now the next trade, I already explained this, but it was this one right here. And there's logic to trade this, but I was already in RTY. And when I look here, my trade right here, you see RTY is just closer to this new week opening gap. It's a lot closer compared to YM. It's a lot closer compared to NQ and ES. Do you see why I'm just trading like I can still expect RTY to go there? That's why I traded that. But why do you think the hourly... So I don't really know, you know what I'm saying? But if it was, like, you simply... Like, I don't have to explain why. Like, you don't have to know why something failed or whatnot. It's as simple as if we're going to be bullish, then this should hold. If we're going to be bullish, then 930 should expand away from the low day. So when it doesn't do it, it's a simple invalidation, right? Then you can, if there's narrative to flip bearish, which there is, then you can just trade the other direction. You know what I'm saying? Like, I don't have to, like, I never do that, by the way. Like, I'm never like, why did it do this? Why do that? Like, I don't really care. It's a simple invalidation game, right? If it's going to be low day, this is your new invalidation. Like, this should hold if we're going to be bullish. But if it doesn't, then that's your invalidation, right? You see an SMT here, right? So this is the real time you should be waiting for, is 930. 930 should just expand away. We already have this lower time frame reversal. We have a candle 2 on the hourly. It should expand away. But when it doesn't, you can actually make a new invalidation from these opposing candles now to the 0.5 of this wick here. So like when this gets disrespected, that's just a red flag, right? As you see, right? This happens before 930. So you see how waiting for 930 is just, I'm telling you, like, just literally wait for that. It's going to literally confirm narrative or invalidate. It does the same thing almost every single day. It's crazy. But yeah, I don't have to know why. It's just because it was bearish day, you know? I don't know. It just wanted to go to this new week opening up, right? But yeah, I don't have to, you don't have to explain anything. Like, you don't have to be like ICT and try to figure out, like, you know, why this happened or what this retracement reversed from this, like, you know what I'm saying? Like, from this Reaper or something. You know, you don't have to do that, bro. Make trading simple. Which time from S&P is best for overnight trades? Like Asia session or London? I still frame like, I don't know what overnight means. Like, is that Asia? Because I don't know how to trade Asia, bro. I'm not gonna lie. No idea how to trade Asia, bro. You gotta ask my guy Kevin for that. He's an Asia killer. What's up, Trist? Yeah, I teach profiles and lens. It's a big part of my trading. Probably the biggest part of my trading. How to determine which asset. It's just relative strength, right? So like you can there's a many ways to do it. It's not just between highs and lows, between like closes of candles or relative to premium. There's like many ways to do it, but we all know like when you have a draw and you see how all these indices are relatively correlated. That's what you want first off. But all the indices, the draw is lower. It's to this gap, right? So as you see, RTY is the only one that created a bearish close. So it's like, if I have a draw on all three indices, I'm just going to pick which one is the weakest. Right? If it's a bearish draw, I'm just going to pick which one's the weakest. You can view that through SMT with highs and lows. There's a couple ways to do it, but yeah, it's just relative strength. And pairing that with the overall direction and whatnot. Profile today seems to be the only thing that's a little clouded for me. Where to go to see all of these? I would watch Afiz's video on it. He's a good protraction profile video. I don't really have one. I have one inside the obviously in the lens I teach it, but as far as my YouTube, I don't remember if I have one. But it's not. If it's on my YouTube, it's not as advanced as it could be. That's for sure. But yeah, there's not a lot of videos. It's like literally Afiz is probably the best video you can watch. A lot of the videos on profiling are really ass or like really vague. Like they're just too simple. It's like London creates a low, then you trade New York. It's like, yeah, but so much more that goes into it. You know what I'm saying? I've seriously not seen one good video besides Afiz's. What do you mean when you say candle profiles? Like the way candles form. So when you think about a bullish candle, ideally we open low first, create the reversal, and then expand, right? Closing the high. And now this opposing run will be supported by a small opposing run, right? Which supports expansion. So both of these, the way that the candle actually forms and also the wick size support bullishness. Now there's two reversal profiles. There's only one that we want to trade. And it's when the candle opens low first, right? Creates its reversal early on the day. Like it has to be Asia session. It has to open low first immediately, right? And then we create a reversal, ideally like prior to 10 a.m. But if it's going to be a 10 a.m. reversal profile, then ideally really early on in the candle, right? So there's enough time to get back to this high. But you see how it's a fluid motion of open low, and then you have session highs to target, so we can expand into. Now, this is just this open low in general also just doesn't support, like the large opposing run size does not support expansion. But we know that this is not going to be an expansion candle because of that. So you must adjust your target, right? You must only TP within the daily range, like maybe a fair value gap, or the current day's high, because we know price cannot displace past that. This is a good example I traded on Friday. Now, what about a reversal that does this? It opens high. Let's say you want it to trade long. If it opens high first, creates some significant run above it, and then we hit a key level down here, then this doesn't support trading a reversal candle, right? It's more likely to close back in the range or just some really choppiness or just consolidation. Like that to me is like a consolidation reversal candle, but you can trade I'm going to show you an example of this. I traded on YM. It would be this day right here, right? So you see this reversal candle? Now, what I just explained to you, you see how this candle opens low first? We take out all these lows, right? And then we create an SMT with these lows. Now you get a two-stage SMT here, right? Which that is a confirms reversal. Now when I go to the 15-minute time frame, you can see that strength switch, right? Because when you look at YM, this is another, by the way, how to pick which asset. This asset forms a gap and also respects the gap. When I go to ES, we don't really have a gap. We have a much smaller gap. We might make a much deeper run. Like I said, like premium discount. You see this deep run? So like YM makes a more shallow run and also respects the gap. So I would choose YM to trade here. And you must TP at the current day's high, which is right here, because we already know that it cannot be an expansion candle way up here or nothing like that. So we just TP at the current day's high. Does that kind of make sense? So yeah, there's only three, or actually like two. You could make it to yeah, actually three candle profiles: bullish expansion, reversal candle, which is actually tradable, and then there is the reversal candle that you want to avoid, I guess, would be another one. And then the intraday profiling, like just internally to that, via sessions and whatnot, like what we're reversing off of, when we reverse, etc. That's like the more of the profiling part. But yeah. And then there's only one way. So like I just said, if you want a bearish candle, ideally it opens high first. There's only one way to trade this open low first. It's actually learns from a fees. It's a delayed protraction profile where we come back up. We just hover above the daily open, create a new wick. There always has to be SMT here at a relevant time, so you're not trading a reversal candle. And yeah, this is actually what happened today. And these are all like, you can make this very mechanical. Like you can make rules around them, which is really cool. Which is what I have done, right? So like there has to be SMT, like I said, and it has to form at a relevant time. So you see how this day opens low first, right? This is when we just reverse off the high. Now, when you think about a candle that maybe opens low first, this is when we displace the highs. So the session highs I'm talking about. In this case, we reverse off of the session highs. But what I was just, this one right here, we target the highs and displace through them, right? So it's a bit different. But here you have 930 reversal at a relevant time with SMT. So it fits that profile. Do you see how this wick is still a small wick that supports expansion? That's still fine. This is specific to New York. Is it the same as weekly profiles? I do use weekly profiles, but it's not like an every week thing. It's really not. And it's not like when we have a Tuesday reversal, let's say, I'm not anticipating a Tuesday, Wednesday, Thursday expand. Like it's not like that. That's not how I view it necessarily. It's more like how the weekly is like kind of like forming. So like this week. This week is just opening high first, right? That typically supports, a move lower, right? But it's really just this gap, right? We have no wick. So when we have a third or Tuesday reversal, then I'm expecting a Wednesday continuation. I'm always looking at price through what the previous candle did or what the previous session did. More stuff like that. More like close. What's the word? Like I don't really care what happened, like a couple days ago or whatnot. I'm more so like close range, continuations or reversals from, right? That's why I don't use like key levels from like really far away. Like I would never use a, oh, what the fuck? Let's go like to this asset. I would never use like a fair value gap, and I see a lot of people do this. They'll be like, oh my god, a fair value gap right here. But it's like irrelevant to the current price action. You know what I'm saying? Like if you want a reversal back in the range, I want to see a closer range reversal. Does that make sense? Hopefully that makes sense. But yeah, I'm always looking at what the previous day did, really. So like this, I wouldn't be like assuming like Wednesday or like Thursday or Friday continuation. Like I don't really care to anticipate that. I would literally just like that's a possibility, but I would still need the profile. Like I really rely heavily on profiling because that's how I can actually like trade. Like I just need to know where the current candle is going. You know what I'm saying? That's literally it. That's really what I care about. A lot of people, they might need to know where this week is going, but not me. So people do like weekly analysis, like where are we gonna go this week? I don't really care. I really don't. I just care about trading the current day, and sometimes the previous day can give you insight on that. Well, many times, but yeah. And it's just if-then scenarios. Like if we're gonna continue lower, then what would we do? We'd respect the 0.5 of this candle's range, and we'd form some sort of bearish profile. That's the most important part. We would have to form some relevant high, right, of the day. And then once you form that relevant high of the day, we need to maintain, like a continuation signature. Meaning, let's say we do something like this, we manipulate. Let's say we create a fair value gap. Now you have a new invalidation. So it's just if-then scenarios. Like if we're going to continue, then this is obviously the high that would remain intact. If this is the high that's going to remain intact, then this fair value gap must hold, essentially. If that fails, then we're probably cooked. It's probably going to consolidate or maybe inside bar or something like that. You know what I'm saying? So kind of like yesterday, if we're going to continue, we have an established low today, but if we're going to continue to targets beyond, so this target, this fair value gap has to hold, and then 930 has to expand away from low day, or respect this gap essentially, which is what it does. There's a bunch of like if-then scenarios really. There's a lot of different ones. They're just scenario based, right? Candle range. Dude, that guy's a legend. Oh, that's so funny. Lower term pros. How lower term pros formed? Oh, lower time. Oh, that's what you meant. Yeah, I would learn like I would watch a fees, like I said. So I'm probably gonna do a T-Talks. I might go over that, like how to frame intraday. That's probably what I'll talk about. Intraday profiling and whatnot, and how to like implement them all together. Like how to go from a daily closure or a, like marking out the 0.5 of blah, blah, blah. Kind of going from the top down, like how to do it, essentially. And maybe give some insight on my model. I don't know. I don't know what I will talk about. For what the fuck? This is crazy. Let him cook for real. Dude, AC, yes. Is AC still in here? Bro just like pops in and sees I'm still streaming. Which indicator? Someone can probably link it to you. This one is like I don't even know. I got it from T-Trade, so it's like a paid one or something. Like whenever I link this to people, they can't use it, they can't open it for some reason. But there's another free one that's like the exact same thing that someone can link you. And then I just use ICT kill zone, the pivots, to mark out session highs and lows. That's literally it. GXC change your life. What do you think about oil? I traded oil today. What's up, Konig? How you been? Oh yeah, this is it. W. Doing good? Hell yeah. Spell what? Oh, a fees. Yeah, like that. Yeah, look him up on YouTube. It's my guy right there. We trade very similar. Like, if you guys see, we catch the same trades like every other day. Lunch macro. Last ditch macro. Last dance macro. Hold on, I gotta see if let me text my brother. Yeah, I already did that in pretty detail on the beginning of the stream. So just like rewatch it when it gets posted. Bet. I'm on the butt. What the fuck? Oh. Bro, I trade GXT and Q. Oh, you did? Did you trade this? I was busy this morning, so I couldn't take it. But this is a pretty large stop loss, so I don't even know if I would have taken it. Do you take this? Or like lower on the range? Because mechanically, like this is also a valid entry right here. There's like a couple. But I like this entry right here as well. This 30-minute model. It's mainly because of the correlation where we see that same candle on the stronger asset is much larger, so that gives insight that this asset's catching up to the stronger assets. So if the stronger asset, or sorry, the weaker asset, if the stronger asset is going to continue lower, then obviously the weaker assets will as well. Yeah, I saw opportunity like YM. Let's actually look at that. Where's 930? Like I said, I personally probably would have waited for 930. My screen is frozen. Okay. What was it like? Is it like super early on the day? Pre-New York Open. RTY pre-New York Open. Really? Where? Like right here? Oh, I see why this could be it right here, I guess. Is it closer of that high right there? Holy lag, bro. It's not even playing. Yeah, like mechanically that is valid, but I'm just not up at that time. Now I'm curious to see around the opening though. Was there a trade? Only this. But again, this is a huge stop loss. And again, I wouldn't even want to see. We're just way too close to this high. There's nothing else left to continue off of, so I wouldn't take that right there. Holy shit, dude, my mouse tweaking. But maybe you could put your stop loss at the breaker. You actually would have got railed if you put your stop loss right here at the breaker. Which if I was going to take this, I'm not gonna, I would put it somewhere around here. Like either use the highest high to this lowest low as a breaker, or the bodies. I would not, if I was going to take this, I would not put my stop loss way down here. Frick that. But yeah, I was not bullish anyways. EU. Yeah, so EU. There's my model right. It's really right here. Right, so here's the previous low, a bunch of feather swings. And then we create a new high of day in London session, or like late London session. But if you know my model, like it's this right here, right? You have this reversal candle. This is the trade right here. You also have SMT. as well there with the previous candle's high. You have also this opposing candle that we're respecting as well, upper half, the lower half. But after that, like once you clear out these lows, you don't want to see this. If we're going to continue, like if you think about continuation signatures or just expansion in general, right, we expanded to this low. Now this is the stronger asset, but you don't want to see these really sharp retracement or like expansion back in the range. You want to see like shallow retracements, right? Or just a continuation right through it when you want to look for continuation. But as you see, we just expand right through it, which is way above the premium end of this range, which is not ideal, right? You never want to see that for a continuation. So that little stuff like that can really help you avoid like low probability conditions. Because if there's going to be expansion day, like a nice expansion day, like sure, it created some sort of an expansion, but at what cost? Like look at this shit. It just literally made the expansion of one candle like out of random, like 1300. That's not a time you want to be trading. So it's like you avoid all this BS right here. You know, that's really the only thing I see there. But kind of like this example, right? If I want to see continuation, literally the same scenario, by the way. We take out the previous high, we expand into it. Now, what's the difference between this leg right here and EU? There's actually fair value gaps here. That's for one. And then you see a shallow retracement. See that more of a shallow retracement and respecting this gap. So that's how you know if we're not going to manipulate this high, we could still see continuation this day. Unlike EU, even though it did expand, it's like I can't anticipate that crap. You know what I'm saying? This is so much harder. Some risk management tips. Are you fixed stop loss? I'm fixed contracts. That's how I do it. Yeah, the indicator is dope. So it's like top step specifically, your max contracts are like 2. So when I get over buffer, I literally just, I'll risk like, I know a lot of people don't do this, but I'll risk a lot of money, like 500 to like 1,000 on a 50K account, which is like sometimes a whole drawdown, but that's just how I do it. Because when you build a big enough buffer, it doesn't even matter, really. That's how you typically get like max payouts. I'm not going to risk, when I'm over buffer, I'm not going to risk like $200. Doesn't make any sense. Why do you guys only trade indices and not currency? It's much easier to trade, much more volatile. You have 930 to refer to every single day. And I would just say the way my approach is and profiling in general is just like, I feel like more things are consistent on indices. I don't know. Like it moves a bit different than forex, you know. Copper? Well, let's take a copper, dude. What is it? HG, right? I don't even trade this anymore. Oh, potentially. Oh hell no! What the hell? You're like, you can look at a reversal candle, like, oh, that looks like a reversal. It's like a YM yesterday. You have a reversal candle, but when you go lower time frame, it's just shit. Like this looks ass. Looks like a consolidation to me, pretty much. Like doesn't look ideal. It's like you can't even trade this day either. I don't know what this is. Like some sort of news. You pretty much prints the whole daily range in like 1 hour. You see this huge ass range. Once you see this, you come into session, you see the range is already printed, like a large range. Literally just avoid the day. Look what you avoid. There's literally nothing to trade there. There's not much. Like you can already anticipate that happening. Uh-oh, UPS driver's here. My dog's gonna go crazy. What about like, what's the other one? NG. We're gonna hop off here, guys, in a minute. But NG. I'm probably on the wrong contract, but whatever. Yeah, this looks horrible too. Like, look at this. So coming into the day, like all you have to look for to the left, maybe a fair value gap. Yeah, you have a fair value gap. Maybe this opposing candle took at the high day, but it's too vague. Like it's too large of a range, right? So you need to create some protected swing away from that, ideally. But you have this manipulation here. But when we first tag this high, we don't manipulate from it. Right? We consolidate, right? You see this small range candle, so then you refer to the consolidation high as a manipulation. I have a video on this, by the way. It's AMD reversal. And I think T-Trades is making a video on this. So like this is your only opportunity, right? Because the daily opens high first, create some sort of reversal. If you get a CSD here, maybe in the lower time frame there's something here. I don't know. It's really ugly. It's so gappy. Hey, this fair value, whatever you trade, right? But it's like when you want to look for continuation towards this low, it's very logical, right? You want this fair value gap to hold, like, because then you don't want to see super deep ass retracement. That's what we do. That's already a red flag, right? And we're not even reversing from whatever is up here. Looks like in the hourly. It's just low probability conditions after we don't continue like that. Not really ideal. I don't like to see these super deep retracements. And you see prices BS's the whole day. Yeah, that was only like one opportunity right here. Looks decent, maybe. And then, yeah, like look here. Within this, if you want to look for a 10 a.m. continuation, even from this fair value gap here, look at the 4-hour close. It's not ideal, right? It's a long wick. It's not ideal at all. But majority of these days I find on like these weird pairs, first off, I can't even refer to like an SMT pair with any of this. So it's like, it's already low probability. There's no economic calendar, I don't think. It's just not worth it. I get a trade like every like 1 and 2 weeks. It's like not. I don't even look at that shit anymore. How do you calculate size? You literally go like this. Let's say you want to put on a trade. You right click. So first off, hold on. Dude, this dog. Alright, let's say you wanted to trade this. You click your position tool. Say you want to set a limit on this order block. You put your stop loss here. Let's say you want to target 2R. Then you right click the trading tool. Go to create a limit order. And then you type in the amount of contracts, and this is going to tell you what it is, the risk. Right, so if you're trading a mini, one mini with 23 points is $475. You see that? And then as you move and stuff, and you can go to micros. If I want to go to look at micros here, do the same thing. Dude, these dogs. Right click on it. Why isn't it letting me? Oh, there, sorry. Now, if you want to risk, let's say $250, well, you just type in, all right, there you go, 5. That's as close as you're going to get. Right there. And it tells you. Okay, sorry about these dogs. Probably going to stop here. But yeah, that's how you do it. Pretty easy. Joey! Bruh. Where's bro working at? Freebies? Crazy. Dude, every time you see someone walking or anything, bro, he'll just fucking go crazy. Gift, dude, my dogs are healthy. They're actually fat. Alright, I'm probably gonna end it here, guys. Good chill sesh. Dude, I actually bought him a toy today. But it was my other dog, because The one yapping right now is kind of an older dog. He doesn't play with toys. But the little pup. Oh yeah, I just saw someone walking. That's why he's fucking yapping. All right, I'll catch y'all later. Y'all have a good one.